I know, should I buy at 29? Should I buy it at 27.75 or whatever? It doesn't matter. The whole idea is that you're getting your capital out of the system and into something that cannot bankrupt. Because when this whole thing goes down, mark my words, the great taking is very real, and a lot of people, a huge amount of people, are going to be left with nothing. Because ultimately, gold and silver, they are real monies. And historically, you went to cash for safety. And if you've got a credit event happening, how safe are some of these sovereign debt securities going to be?
But first, smash that subscribe button.
I know, should I buy it at 29? Should I buy it at 27.75 or whatever? Who knows? And when all is said and done, it's not going to matter. The whole idea is that you're getting your capital out of the system and into something that cannot bankrupt. Because when this whole thing goes down, mark my words, the great taking is very real, and a lot of people, a huge amount of people, are going to be left with nothing. I've seen it all going back to, I was a broker during the 87 crash. So, I watched the reflations, I watched the credit bubbles, I watched the credit bubbles blow up. And we are in a global credit bubble not ever seen in the history of man. And I would just tell you that all credit bubbles blow up throughout history. I mean, you can go back hundreds of years, and every credit bubble ever has blown up, and that's where we're headed. I do want to mention, as long as we're talking about the stock market, you mentioned Warren Buffett. Warren Buffett, I mean, I can remember back in 1998, 99, people were saying, Warren Buffett's washed up because he wasn't buying the dot-coms. He was raising cash. He had a huge amount of cash going into 2000, 2001. And of course, the market cracked. Same thing happened again in 2007, 2008. He was raising cash. And he now, I think the number is 145 billion in cash is what he's sitting on. And that is the largest amount of cash outright, and the largest amount as a percentage that Berkshire has ever held. So the reasoning behind him raising cash, and I mean, he says this himself, is that he can't find anything of value or of good value to purchase. So cash is a better place to sit. Now, I do believe that when this does go down, Warren Buffett is going to find out that he's sitting on the wrong type of cash, because ultimately gold and silver, they are real monies. And historically, you went to cash for safety. And if you've got a credit event happening, how safe are some of these sovereign debt securities going to be? I think we're going to find out that, not everything's AAA rated, not everything's safe. And we're going to find a bunch of sovereigns that get discounted and downgraded, maybe even completely collapse.
In today's news recap, gold in holding pattern as markets await U.S. data. Gold prices slipped in thin trade on Monday, as markets awaited next week's U.S. economic data and the potential impact of President-elect Donald Trump's return to office on the Federal Reserve's 2025 outlook. Spot gold was down today to $2,618.99 per ounce. Quiet day with lower liquidity across all asset classes, likely due to the holiday season. UBS analyst Giovanni Staunnovo said, adding that market participants will track upcoming U.S. economic data to see if the economy is slowing, which would allow the Fed to keep cutting interest rates. Fed Chair Jerome Powell said earlier this month that U.S. Central bank officials are going to be cautious about further cuts after a quarter-point rate reduction in December, in line with expectations. For insights into the health of the world's economy, traders await next week's U.S. job openings data, the employment report, the FOMC meeting minutes, and the U.S. employment report. We still see the same factors in place which supported gold in 2024, ongoing central bank purchases with a desire to diversify their reserves and ongoing U.S. rate cuts supporting investment demand, Stanovo said. Gold has gained around 27% so far this year. It hit an all-time high of $2,790.15 on October 31st. Markets expect significant U.S. policy shifts in 2025, including potential tariffs, deregulation, and tax changes after Trump returns to the White House in January. Now we'll show you more clips of the latest interview.
I think all of us have noticed that, we got more sales this year than probably the previous 3, 4, maybe even 5 years combined. I believe that is not a function of, if you want to call it financial markets. I believe that's a function of the real economy. The real economy, because of inflation, because of joblessness that's not reported, people are needing to fall back on their savings. And we as gold, silver people, we've seen these people buy over the years. We didn't see them sell because the real economy was not as crappy as it is right now. The real economy worldwide is slowing down. Now, I've talked about this probably 10 times in the last 3 or 4 months. But if you took, I use just the US, but it should be looked at it worldwide. If you took the deficit spending that the US has done just over the last 5 years, $15 trillion of accumulated deficits. If we didn't have those deficits, that money, that 15 trillion, would not have been part of the real economy. It would not have been part of GDP. And we would have been reporting, instead of 1.5, 2.5, 3% growth, we would have been reporting 3, 4, 5, 7% decline. And that's the case worldwide. The deficit spending, the use of credit, is masking the fact that GDP is no longer getting a boost by a multiple out of every dollar that's borrowed. It's actually getting a boost of less than 1-to-1 for those deficits that have been borrowed. So there's your math right there. I mean, we've hit debt saturation. Absolutely, you've got China trying to buy directly from miners. And that's a huge deal, because that means there's going to be less metal that'll make it to refiners, and thus less metal available for LBMA and for COMEX. One other thing is that, very interesting, back in, I think it was October, Russia announced that they were going to be purchasing other commodities, and the first one they named was silver. And I mean, the supply and demand is on a knife's edge, so you get, additional demand is going to blow up the supply. From a short-term, technical standpoint, we're oversold again. I mean, we've seen multiple times this past year where the metals bottomed. I posted, and I think, Andy, you posted my charts also, showing the bottom hooks. And I think what that illustrates is exactly what Andy was talking about: central banks stepping up and creating demand for gold. Not so much silver directly, but silver's going to move with gold. So I think that is definitely significant. And I don't think I really don't think it's important